Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of HSIL Limited, hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference has been recorded. Before we begin, I would like to remind all participants that some of the statements or comments made on today's call may be forward-looking in nature. These may include, but are not necessarily limited to, financial projection or other statements of company's plans, objectives, expectations, or intentions. The company disclaims any obligation to update these forward-looking statements to reflect future events or development. Kindly refer slide number 19 of the earnings presentation for a detailed disclaimer. I now hand the conference over to Mr. Umesh Raut from Dolat Capital. Thank you, and over to you, sir.
Thank you, Jacob. Good evening, everyone. On the behalf of Dolat Capital, we welcome you all for Q3 FY22 post-results conference call of HSIL Limited. We are pleased to have senior management team from the company represented by Mr. R.B. Kabra, President and CEO of Building Products, Mr. Rajesh Khosla, President and CEO of AGI Glasspack and Garden Polymer, Mr. Om Prakash Pandey, HSIL CFO, Mr. Sandeep Sikka, CFO, Group HSIL. I would like to hand over the call to management now for their opening remarks. Over to you, sir.
Good evening, everyone, and welcome to the Q3 FY22 earnings call of HSIL Limited. I hope you and your family members are safe and healthy. I will read the disclaimer. The actual outcome may vary as they are dependent on several external factors as well. The participants may make their own assessment. We have already circulated our earnings presentation, which is available on our website as well as on the stock exchange website. I hope you have had the opportunity to go through the presentation, and we would be happy to take any question afterwards. We will begin this call by providing you with the details of the recent announcement slump sale of Building Product Division, followed by a discussion on the company financial performance, and then I will hand over the call to Mr. Kabra and Mr. Khosla to share the details of the business division's performance. Our board of directors have approved the slump sale of assets and liabilities of the BPD division of HSIL to Briloka Limited, a wholly owned subsidiary of Somani Home Innovation Limited, for a cash consideration of rupees 630 crore, subject to closing date adjustment. Sales proceeds will be utilized towards prepayment of existing bank borrowings and will enable headroom for accelerated growth.
Sorry to interrupt. This is the operator. Sir, we are getting an echo. May I request you to be on the handset mode?
I'm on handset only.
Okay.
This transaction has been carried out with the objective that HSIL has completely focused on the growth of its packaging business and capitalize on both organic and inorganic opportunities. In the past few years, the company has emerged as the most profitable glass packaging company in India. Our current market position and a well-defined growth strategy will help the company to unlock value for all the stakeholders. Moving to the financial performance of the company, in the third quarter, the company delivered a total income of rupees 645 crore, a growth of 18% on year-on-year basis and 14% on a sequential basis. HSIL delivered strong revenue growth driven by increased demand for glass bottles in the beer and wine industries in the packaging product division and sustained demand momentum in the real estate sector driving building product division. We registered a strong year-on-year growth even when the comparative quarter in the last year has a high base due to pent-up demand post-COVID-19. EBITDA for the quarter stood at 96 crore with EBITDA margin of 14.8%. Profitability margin were impacted in Q3 FY22 due to a spurt in the input commodity prices. We expect the situation to normalize going forward as these are passed on in the coming quarters. EBIT for the period was rupees 61 crore with EBIT margin of 9.4%. Profit after tax stood at rupees 28 crore with PAT margin of 4.4%. Now I would hand over the call to Mr. Kabra to discuss building product division.
Yeah, thank you, Mr. Pandey. A very good afternoon to all who are here for attending this call. In Q3 FY22, revenue from operation of the building products was rupees 243 crore, registering a growth of 35% on year-on-year basis. Revenue growth was primarily due to sustained demand in the real estate sector with supportive interest rates, and EBIT for the period was rupees 7 crore. Some of you are already aware, but for the information of all, I would like to mention that currently we are under the process of completing the slump sale, which is expected to close with customary closing date adjustment on or before 31st March 2022 and subject to necessary approvals. Building Products Division operation post slump sale will be part of Briloka Limited, which is a wholly owned subsidiary of Somani Home Innovation Limited. So this is brief about this business, and since it is getting transferred, so now this will get passed to Briloka. So I would now hand over the call to Mr. Khosla to talk about the Packaging Product Division. Mr. Khosla, please.
Mr. Khosla, may we request you to unmute yourself if muted?
Oh, sorry. Thank you, Mr. Kabra, and good evening to all the participants. The Packaging Product Division saw the growth in production, capacity utilization, sales volume, and revenue. Revenue from operation was 398 crores in Q3 FY22, registering a growth of 10.2% on year-on-year basis and 29.2% on quarter-on-quarter basis. Revenue growth for the period was driven by the beer and wine industry. The packaging product segment contributed 62% of the total revenue. EBIT margin stood at 15.6% in Q3 FY22 compared to 17.6% in Q3 FY21. As mentioned earlier, total fuel and power cost for glass container manufacturing has increased by 48% per metric ton on year-on-year basis for the quarter, which has put the pressure on the margins, but we are expecting the retrieval of margins due to strong operational efficiencies in the manufacturing process and to plan to pass on the increased cost to the customer. Relining process of one of the furnace has been completed and glass container capacity utilization during the quarter was 92%. In the same quarter, as compared to 83% in the same quarter last year and 66% in the previous quarter. Looking ahead, we are expecting incremental growth from a high value product segment as we will soon operationalize our specialty glass manufacturing unit at Bongir, capable of producing 154 tons of glass per day. With the announced realignment of the business, Packing Product Division will be the core operation of the company and supported by numerous favorable factors such as dedicated focus of the management, strong capital structure, new product offering, strong operational efficiency, and improvement in macroeconomic environment which will propel the next phase of growth in the company. Thank you very much. Now we are ready for any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Zakir Hassan, an individual investor. Please go ahead.
Hello, can you hear me?
Yes,
Hello.
sir.
Yes.
Yeah. You are
Sir, we've been, in fact, looking forward to this transaction by the management where the building product division would be separated, and I think congrats to a great decision, sir. Sir, there was a press release 2-3 days back where your Bongir plant has started, 155 tons per day. That's on Monday, I think. And in that press release, there was a mention of HSIL being able to achieve 1,700 crores turnover in March 23 with this new facility. So could you give a brief on that, sir? And my next question is, after this transaction gets completed, the sale of the building products, would the net debt be on HSIL's books, sir? Thank you.
So I'll answer the question on the net debt.
My question is, hello, can you hear me?
Yes,
Yeah.
Yep.
Am I audible?
Yes, you are. Please go ahead.
Yeah, my question is, just now, Mr. Sikka, I thought, was it Mr. Sikka, or I don't remember the name, on the depreciation benefit.
Yes.
What was the figure mentioned? I couldn't get it.
So quarter 3 depreciation for building product division was 7.2 crores, quarter 3.
Okay, you have analyzed the figure.
So then just the annualized impact should be somewhere around 28 to 29 crores.
Okay. Now my main question is, which I would like to understand, post the sale, slum sale, what would be the movement in debt at the gross level and the net level? If you could please explain.
So we already answered this. I'll respond to this again. So we have a total debt of 1,200 crores today.
Okay.
And the slump sale, the value is 630 crores subject to closing date adjustment. So if I just subtract, so by that level the debt will come down. So the debt will come down by 630 crores from 1,200 crores based on the current date valuations.
But there are some fresh additions also, no? Like 200 crore will be added. That's the
Yes,
estimate.
that I've already responded,
Yeah. Now my next point is, like, what is your plan to raise capital? Because there are some capex involved also.
So generally, with the thumb rule we use is that 60 to 70% of long-term capex should be long-term loans, and balance, 30-35% we should put internal accruals as such. Because we generate internal accruals, so that can be deployed towards creating further growth.
And one last question, sir. I had read somewhere the day the announcement came that company may go for post slum sale, may go for outright sale of glass division also. Is it correct?
No, I think nobody has communicated
There was
that.
a report in ET to that effect.
No, I can't respond to it. I haven't seen it, but there is no plan as such to sell the glass business.
Okay. So apart from glass, are there any other opportunities available in related products?
So, glass itself has provided good opportunities, we feel so. That will help us grow continuously, for next few years. Because glass is a sustainable material. It's it is classified as a green material because it can be 100% recycled. and it is not harmful as such. So we feel that on a sustainable basis, this material has a good market potential to grow over next few years. So we'll unleash our values. We'll invest into the money. We'll invest the monies for the growth of this business going forward.
Yeah, and a related question, the latest trend I gather is specialty glass for solar panels. Am I correct?
Yeah.
Yeah.
Are you interested in that segment?
The interest, we keep evaluating various options as such, but as of now, board hasn't approved anything, so I can't make a response to that.
Okay, thank you. Thank you, sir.
Thanks.
Thank you. Ladies and gentlemen, you may enter star and one to ask a question. The next question is from the line of Praveen Sharma, an individual investor. Please go ahead.
Yeah. Good evening, sir. Am I audible?
Yes, you are.
Yeah. Sir, in the presentation, it's written, and actually it's part of the mail also, which has been sent to the shareholders, that Bahadurgarh and Nishanpur land and building has been kept on our books, and
Yes.
it will be given on a rent or a lease, long-term lease to HSIL. So
Yes.
what is the rationale of this? Why are we not transferring? And the second is, how much rent or lease do we expect from this on an annual basis?
So, if you see the rationality, this Bahadurgarh land, which is there, this was the first plant set up. So this land is touching almost the premises, the NCR region. It's in the NCR region, touching the Delhi border, and circle rates for this land is high. So although there is an industry on it today, but when you see, like most of the industrial land today, in order to make a viable project, you have to buy a cheap industrial land. So the buyer was not interested in buying such a costly land, and because the unlocking of this land may happen over 15-20 years ultimately, because when till that the plant is running there. On Isnapur land, we had odd 80 acres contiguous land parcel, and the pipe plant is only 26 acres on that, and we never wanted to disturb the contiguity of the the entire land parcel over a period of time. And for these two reasons, this land has been given on lease and approximately 15 to 16 crores. And as a part of the shareholder approval, the lease rentals have been negotiated for the next 10 years on basis of arm length and the valuations. And it will be blessed by the shareholders as a part of the resolution.
Okay. And sir, what is the closing date? It is 30th September?
No, the endeavor is that we should complete the transaction by 31st March, on or before 31st March 22. But this is subject to various approvals, because as a part of this, we'll require shareholder approvals. We'll require also approvals from various other government authorities for transferring the operations from one company to another company, because this is still not a NCLT scheme of demerger as such. So we are.
No, my question was, the 630 crore would be on a closing date of 30th September, correct?
Yes, 630 crore is based on the valuation as on 30th September 2021, and any incremental capex which is there or any changes in the working capital which is there will be adjusted on a cost-to-cost basis.
Okay, so that will be adjusted. Okay, so that will be additional. And coming on this specialty products, sir, what is the kind of margins this kind of product profile enjoys? Because this goes into high-end industries like liquor, cosmetic, perfumery. So what is the typical margins, ballpark margin?
I'll request Rajesh if you can take this, please.
If you read my statement, we have been getting a EBIT margin of around 18%. Q3 21, because Q3 22 is not a right representation because of the cost of fuel increase. So obviously the EBIT margins of specialty products are higher than this 18%. Are much higher than 18%.
Much higher means higher. Okay. So means fair to assume around 25 or something, in that range.
It may be close to 22-23% or maybe little more, because the product is yet to be placed in the market, and we will see the response But as such, market is quite good and encouraging and is quite expanding.
And sir, in this market, there is a gestation period which is quite long, means in terms of sampling and other things, or we typically find ready-made customers and, means ramp up is relatively faster than,
First is regarding a production. So production is not a problem. It will take only few weeks when you get a right quality of product from your furnaces. And regarding the placement of the product in the market, there is a wide spectrum of the product which can be placed in the market and accepted in a market. So even if you are in the mid of the spectrum in the beginning, still your product is saleable and all. Okay, there can be a little pressure on your margins, small one, but as soon as you climb the ladder of the higher spectrum, you will be getting the more of the cream of the market in your this thing. And since we have invested a handsome money and we have taken a technology from the best of the companies in the world, so I don't think so there will be much of a challenge in the times to come to get a right product from our furnaces.
But then, we have already started marketing of this?
Yes, we are already in the market beforehand also. In the sense that we were not there for those products, but we understand with these customers because of our product profile before that. So we are well placed, well accepted in the market. So there is not much challenge from that perspective.
Okay. I'm just, just to mention, I was talking from, there is a company called Held Glass and they went into specialized glass also together with Haynes. They had a joint venture and they are not able to, still roll out an acceptable product after 3.
First, today we have a total debt of 1200 crores on HSIL, and of which 630 crores, will get from Reloca, so which will pay off the debt which is being utilized today. But there are certain capital work in progress, which is there. We are trying to de-bottleneck certain capacities. Mr. Khosla will talk about it. And also other, normal capex which is there, and also some relinings which are coming up for the next financial year. So debt may increase by another, 200 to 250 crores over next 12 to 18 months after the dip. But that will also lead to, the incremental sales coming from 154-ton furnace. We are also trying to de-bottleneck the capacities, which will also enhance the overall sales. I'll request Mr. Khosla to throw light on the overall sales question, which was the first question. I hope I answered your second question.
As I understand fully your question, you want to know that the 154-ton furnace, which is a specialty glass furnace, has been started on Monday. The furnace of 154 ton has been fired on Monday. It is a process before we start. It is a preheating of the furnace, and it takes around 15 to 20 days for the preheating before the actual production starts coming. So we expect that by mid of February, the production will start coming, and then it will take further around few weeks to stabilize the production. And we hope so by the end of this financial year or early next financial year, the right product is going to come out of the furnace. Regarding the 1700 crore remark, yes, because the new furnace is 154 ton, so which is going to produce almost 50,000 ton of the products of a high margin products or a high value product. If we add the top line of these additional quantity plus the extra quantity which we are going to utilize from our existing business, the total top line will be close to, in glass I'm talking, will be close to 1700 crores or maybe a shade more than 1700 crores. So this is the status as on date on the glass part. If any
best wishes for your journey next year, sir.
Thank you, sir. Thank you very much,
sir. And just another add-on question, sir, if time permits. Sir, at this very moment, Hindustan National Glass has gone for NCLT. There was some, I don't know where, there was some kind of a news bit or something where it is written that HSIL may be interested in bidding for it. I mean, is there any truth in that, sir?
Sir,
we see market opportunities, Rajesh. Allow me. So market opportunities are huge for the glass, both organic and inorganic for us. we keep looking at various opportunities. So this opportunity is there, but it has to run through the process of IBC, as we are given to understand based on the public knowledge. So we cannot assure, on what time frame it will be available, or how much will be, because it will be a bidding process under the IBC. So definitely it makes a lot of synergy for us for this type of business, because it gives us an ample opportunity to grow. But at the similar time, we are also evaluating various other opportunities, so that we can further enhance the sales, further do more value-added products, like Rajesh talked about, the new furnace. Then we are putting some finishing lines so that we can give more value to our customers, have more margins on the bottom line. So that's the whole thought and the plan.
But the thought would be there, sir. I mean, depending on how the opportunity pans out, the thought is there.
Thought is there, but this is all subject to necessary approvals from our board of directors.
Of course. And sir, this debt question, sir, don't you think, once we've got down our debt to reasonable sub-6, getting it back again to 750, 800 crore would the balance sheet be able to take such debt comfortably, sir?
So you see, most of these businesses which we do on the glass side are very high capital intensive businesses. You have to understand where the money is going. So money is going towards, further, the major chunk of expenditure next year would be, relining of another furnace, because that is very essential for the life of the furnace to properly run, upgrade. Then we are also investing to see how we can debottleneck the existing capacity so that we can generate slightly higher tonnages, because right now we feel that by making some incremental investment rather than putting a whole plant, if we can debottleneck the plant. So all these investments will go towards this, but this will definitely lead to incremental sales also going forward. It's not that, it is all into the maintenance capex. So idea is to enhance the sales, debottleneck, improve efficiencies of the plant, better margin on the bottom line.
Fantastic, sir. And sir, on the macro level, sir, are we getting that China plus one advantage out of whatever has happened lately? And can you throw some light on the increased fuel cost? I think natural gas prices, gas prices have started falling. So could you just throw some light on that also, sir? Thanks a lot, sir.
I'll request Rajesh, if you can take this, please.
Yeah, I can do that. Thank you very much for that. And regarding the cost increase, the quarter we started from October, there has been a exponential increase in the prices of raw material, in the prices of fuel. And this is a worldwide phenomenon. It is not related with we people. It is not related with India. It is related all over the world. If you talk about the price movement of fuel prices, I'm talking on quarter-to-quarter basis, Q2 to Q3. The prices of natural gas has gone up by more than 100%. What we used to buy at around 20 rupees per SCM, it has gone to 44 rupees or 45 rupees per SCM. The furnace oil has gone up by almost 9%. The LPG has gone by almost 16%. The coal is gone by around 7 to 8%. So the prices of all the fuel items are on fire. And the bad part is it's exponential. And the good part is all your customer, all your stakeholders, they understand this phenomena. And it is a very good at our part that we have been able to optimize the use of fuel by using the right product mix. That is the reason the impact on us is very, very low. Part of that impact has already been passed on to the customer, and the rest part of that is already under discussion where it will be passed on to the customers. So our position looks to be quite healthy in the times to come. But yes, it is always, there is a time lag between the cost increase and the price settlement. So there is a time lag. And it depends upon industry to industry. In our industry, it can go up to 1 quarter to 2 quarters. So we look forward for the next quarter where the result should be reflecting the compensation of cost increase.
Sir. And about the China business, sir, do you think we are getting advantage out of that China plus one cycle which has come in?
Sir, regarding China, we were not much impacted earlier also with the China, because in a glass item, it's a very localized type of business where the freight plays a very important role, and sending the glass, which is a basic material, it's not very effective. So what happens is there were some special glass.
Special glass, yes.
Yes, sir.
The special glass which was imported.
Yeah, like pharmaceutical and all, which we will start manufacturing in 154, and we hope to capture this market. And rather now freight containers and the freight are very, very high. So we look forward that the advantage of this freight escalation will help us in realizing better prices in the local market.
Fantastic, sir. And sir, if I may just add, what is the depreciation impact on this moving the gross block into Somani Home? I mean, how much depreciation benefit the HSIL will get in the current year, sir?
Mr. Sikka, please reply on this.
Yeah. So if you see the total depreciation which is charged in the BPD for a quarter was around 7.22 crores. Just annualize this, maybe around or 29 crores to 30 crores of depreciation will 29 crores.
Will get off the books.
Yeah.
Thanks a lot for your patient answering, sir, and best wishes for the new innings in HSIL to the entire management. Thank you, sir.
Thank you. Thank you very much, sir.
Thank you. A reminder to all participants, you may enter star and 1 to ask a question. The next question is from Tanay from RT. Please go ahead.
Hi, my question has already been answered. Thank you so much.
Thank you. The next question from the line of Dheer Kotari, an individual investor. Please go ahead.
Yes. So my apprehension was
all those lessons have been learned from the past performance of these companies, and all care has already been taken.
That's good, sir. That's excellent. And all the best. And I think we are on a road of new journey, and we see a very brightful future. Yes. Thanks a lot and good luck.
Thank you very much, sir.
Thank you. The next question is from the line of Nikhil Gada from Abacus Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So just in continuation to what the previous participant had asked regarding specialty packaging, are the clients that we are going to, I am assuming this is going to be completely 100% B2B and on an order basis. Are the clients someone we already work with, or these are going to be completely a new set of clients that we will have to procure?
Sir, I like to answer like that. Say around 30% of the customers will be same as we have been either serving or we have served earlier or we are already in touch, 30%. And almost 30% are those customers which we are knowing them, but we have not dealt before, but we know them very well. And the balance 30% will be a new customers for us, where our acceptability will be very large because they know us as a glass company, so it will be quite easy for us.
And all these customers would be in the cosmetics and perfumery. They would.
No, sir. This furnace, this plant will be producing cosmetic, perfumery, high-end liquor, nail polish, vials for vaccine, and food segment, and specialty pharma segments, and some of the even tableware and these segments. So it is quite a big spectrum will be there. But yes, perfumery and cosmetic will be top on the agenda.
Understood. And since we are making such wide range of products from this plant, is it safe to assume that the peak capacity utilization that we can achieve would be in the range of 80-90%, or we can still achieve 90%?
It will take a little bit of time to reach to that level. It is the stabilization of processes and furnaces, but I'm very sure in the first half of the next financial year, we will be reaching a peak very soon.
Understood, sir. And just to complete this point, so the asset turns, I'm assuming, if I'm not wrong, we have invested around 250 odd crores in this business. And in terms of numbers, I think, what kind of asset turns, is it around 0.7, 0.8x that we'll achieve?
So we should do ideally around. Sorry, yeah, Rajesh, you can go ahead.
No, please. I missed the question. You carry on.
So we can do ideally one time, here.
And so the investment was 250 odd crores, right?
Yeah, because what happens is the realization here is very high.
Right.
So we expect that we can do from 0.9 to almost one time.
Understood. And sir, the 250 odd crores debt that you mentioned that it would increase apart from debottlenecking, does it also include this capacity expansion of specialty packaging?
So part of this payment is still to be done because we have just ignited the furnaces. So all the 100% payment has not been done. Few payments will be done over a period of time, and then the furnace is coming up for relining next year. So that includes that and also debottlenecking of the capacities.
Understood. And sir, just if you don't mind my asking, how much payment would be pending in this?
So I don't have right now. I can share with you separately maybe.
Sure, sir. No worries. And sir, just the second question, Costa sir had mentioned that we have taken some price increase in 2Q. Firstly, wanted the quantum of that, even the average increase, and how much further price hike needs to be taken so that we get back to those 17.5%, 18% EBIT margin levels?
Rajesh, please.
What happens is the price increase system with the customers are a little complex in nature because they have some price variation formula. For part of the customer, it is one-to-one negotiation, and part of the customer is some other mechanisms we follow with that. So ultimately, at the end of the day, because this is a phenomena which has happened to all the people around the world, so all the cost which has happened to all the glass industries will be finally passed on to the customers, maybe in this quarter or maybe early next quarter. So everything will be passed on. So going back to the same level, we'll have, I think so, maybe in the Q4 of next year or Q1 or further next year can be there.
And what would be the average price hike we might need to take?
See, it all, because the cost is very fluctuating. What has happened in the month of Q3 started, it has incremental gone up. Now again the oil has jumped to $90 or $92, so the cost impact will be further there. So I think up to December, the total impact on the pricing part or on the cost part was close to around 14 to 15%. So I hope so this much should be coming to all the price part.
Understood, sir. And just lastly on the building division, definitely a very a great call in terms of transferring it to Briloka. Just wanted to understand. I was under the assumption that we are doing a pipe expansion as well as we are going to add some amount of the glaze capacity and all in sanitary ware, which was going to expand our capacity by 10%. Whether both these expansions are part of the 630 or we will have to take over and above that amount. Hello.
Ladies and gentlemen, the line for management is disconnected. Please hold while we reconnect him. Ladies and gentlemen, the line for management is reconnected. Thank you, and over to you, sir.
Yeah, please.
Yeah, sir, should I repeat my question or?
I don't know whether I got disconnected or everybody got disconnected or all your questions are answered.
No, I am on the line, but you have to answer the question. I was not disconnected.
Okay. So can you just repeat the question, please?
Yeah, sure, sir. So what I was really asking was that, we have this capacity expansion in pipes as well as in sanitary ware. So wanted to understand whether this will, this was part of the 630 crores or this would be over and above the 630 crores?
So there was an expansion which was happening underway. So all the capex, capital work in progress, which was as on 30th of September has been acknowledged. So any incremental capex which will be there, that will be paid off on a cost-to-cost basis.
Understood. Understood.
Post September 2021.
Understood. And sir, what would be the gross block of the entire gross block as of now, 30th September?
Entire, you have it. You can see the segmental results. I think you can get it from there. I don't have right now.
Because that also includes the working capital, so that is the reason.
Okay, we can get back to you on this.
Sure, sir. So that will be all from my side. Thank you for answering all my questions. All the best.
Thank you. Ladies and gentlemen, you may enter star and one to ask a question. A reminder to all participants, you may enter star and one to ask a question.
I think there are no more questions. So thanks. I think thanks for everybody for joining us today. It was a wonderful call, and we are always happy to answer your questions. If you still have more questions, you can always write back to us, or you can get in touch with Churchgate, and we'll be always there to make an appropriate response to all your queries. Thanks again. Thanks for joining on this call today. Thank you.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.